Hey traders, this is Blake Morrow with Traders Summit, and it's Friday, and Fridays, what Fridays are all about. It's bringing in Mr. Jim Welsh from Macro Tides. Good to see you, Jim. How are you?
I'm good, and I doubt that my name is why they have "Thank God it's Friday." Might have something to do with the end of the work week,
Thank God it's
right
Jim
around the
Welsh
corner on the
Day. Thank
weekend.
goodness.
You
We're,
know, but thank
we're all
you.
real happy. Hey, before we even get started, I know last night it was an atrocity. When you're talking about the loss from USA to Panama. Just you thought I was going to say something different, didn't you?
I did.
You did.
I really did.
You thought I was going to go there, but I'm not even going to go there. I'm just going to say go USA on Monday. How about that?
Oh, that's perfect,
All right.
and
So
you have a
Jim,
better
let's
chance of that
go
happening.
ahead. Go ahead.
No, USA on Monday. I like it.
Yeah, USA on Monday against Uruguay. Maybe that all rhymes. Anyway, um,
It
hey,
does.
let's jokes aside, let's get into the
Yeah.
markets because you have been calling for a marginal new high in equities at the time of filming. Stocks are sitting at their lows. We seem to have a pretty big reversal from it's
Yeah.
intraday, and
Intraday high.
it's not, yeah, just from intraday highs. And I know you're going to get in the charts, but do you think this is it? Is this it? Is this the top, Jim? Is this it?
Well, this is a top, and I think we're on the cusp of a 5 to 7% pullback in the S&P, and that's based on the wave pattern that we talked last week about, the internal weakness that we touched on last week, and we're going to talk about that a little bit more this week. And so it's a number of factors. The economy does show more and more signs that it's slowing. The fact that the PCE came in, what I'd say is a better than expected number across the board, and yet the bond market is down, and the equities tried to rally. I think a little bit based on the results of, or the perception of last night's debate. So there's a lot of things coming together, Blake, that I think just says the market is weak enough that any pickup in selling pressure, we're going to see a correction.
Jim, I was getting ready for this for the day, and my wife and I both work from home. We both have home offices, and she's like, is the stock market up today? Because her view was Trump viewed as a winner of the debate, stocks should automatically be higher, and that was pretty much the. I'm like, no, it's down a little
Yeah.
bit, but my position to her was everybody's already expecting that, so it wasn't any new news to us. What do you
Yeah.
say about that?
Well, yeah, I think that's part of it. Again, I, like many people, was just saddened by the debate, from a standpoint that, Trump was Trump. Joe Biden was tragic. I mean, in a sense, it's a lot of people have been kind of in denial about his mental capacity and everything else. Um, I think we're like, whoa, this was a real dose of cold water and wake up time. When the debate was over, I was just curious to see what MSNBC, which is, the left channel, and I was astounded, Blake, when Van Jones and a bunch of stalwart Democrats were like, this was awful. They got to come up with somebody else.
Yeah.
So it was that bad for those people who have been staunchly, supporting Joe Biden, defending Joe Biden, criticizing anybody who's, oh, look at those are fake things. For anybody being objective, um, we've been watching this stuff, and we have, a lot of people have older grandparents, and you see all the signs in your grandparents, and then you look on and see Joe Biden, and it's like, wow, things have changed in the last 4 years, and I don't believe anybody believes he's truly capable of lasting another 4 years. And at the same time, looking at Trump, I just can only think of people around the world looking at the debate and just wondering about what's happened to the United States, you know.
Yeah,
And
yeah, no,
I'm sure I'm going to tick off people on the left and right, which is fine. I'm kind of like a pragmatic, common sense guy. We've got a lot of problems we need to address. The ideologies on the left, the ideologies on the right don't seem to be making a lot of progress. So we need something else, something different that will be, I think, pragmatic, commonsensical, and actually pull people together.
well, let's see if that happens between now and November. So, but in the meantime, Jim,
In the meantime,
we're going to talk a little bit about markets, and appreciate your comments. And but you brought a couple of slides that are a little whimsical to start, but let's get
yeah,
into them.
yeah. Well, I just thought, it just seemed appropriate. I saw this, maybe other people have seen this, but it just made me chuckle a little bit. And I thought all of us could use a little chuckle this morning. Brain cells die, skin cells die, and even hair cells die. But the fat cells in my stomach must have accepted Jesus Christ as their Lord and Savior since they seem to have eternal life. Anybody who's gotten a little bit older, metabolism slows down, you try to change your diet, increase your exercise, and you're like, none of it's working. So to me, this was kind of, it's like reality.
I chuckled. I chuckled.
Yeah, well, good. And the second slide is, you and I, have these conversations every Friday. This is a way for someone can, access a complete weekly technical review. Just click on if you go to my Twitter or X, whatever you want to call it, at Jim Welsh Macro, you'll see this picture. You just click on it and you'll be able to read from start to finish everything that I wrote on Monday of this week. And I think I'm doing this because I think it's a value, obviously. And it's a promotion.
Of course it is, but still, I mean, what you do here and what you do with your subscribers, it is of value, and that's why so many people listen to your interview each and every week. And we thank you all for doing that. So, Jim,
Yep.
let's get into the stuff that matters this week,
Yeah.
and make sure you guys write down Jim Welsh Macro on Twitter. Go check out his most recent technical review. So, what do you make about this GDP?
Well, again, my point is it went from 1.9 to 1.3, then to 1.4. But what stands out to me is what caused most of the decline in GDP was consumer spending. And as we know, consumer spending makes up about 70% of GDP. It's certainly been what is pushing the economy forward for the last 18 months or longer. And so I'm just looking for signs. The narrative is we don't have to worry about a slowdown or a recession. All right. Well, in the first quarter, there looks to have been a retrenchment by consumer spending. The April and May retail sales numbers, which we talked about last week, came in and they were softer. So in other words, the slowdown in the first quarter, if you look at retail sales, looks like it's continued into the second quarter. Now, is the economy going to fall off a cliff? Absolutely not. Again, it comes down to you transition away from growth toward a recession. Normally, it's a process that takes months. And so to me, that first quarter, normally would I pay attention to it? No, it's months in the rearview mirror. But the composition of the slowing, I think, is worth noting.
All right, and the next chart that you brought in, this is market averages are diverging. What is the gist
Yeah,
of this
this.
chart that you're showing here?
So the point being is if you look at the table from March 28th to May 15th, you can see, okay, semiconductors up 1.8, the Q's up 1.6, the value line in Russell a little bit weaker, the New York Composite a little bit up. The point being is there are 25 stocks in the semiconductor index, the SMH. There's 100 stocks in the Qs, 500 in the S&P, 500 in the equal weight S&P. The value line and New York Composite have more than 1,700 stocks, and the Russell 2000 has almost 2,000 stocks. So if we look at the broad market, it's like, okay, it wasn't that bad. Then you look at what's happened since May 15th, and you can see, whoa, all of a sudden up 17.7% in the semis, And the broad market averages are uniformly down quite a bit. And then if you look from March 28th to June 18th, up 19.8 versus down over 5% in the broad market. So all this shows is just the shift in buying concentration. Since May 15th, it's like about a month, has
Yeah.
been extreme.
But
Historically,
Jim, this
yeah,
week though, haven't we seen some rotation this week?
a little bit. And that was one of the reasons why in Monday's weekly technical review and last week when we talked, my expectation was we were going to see a bounce. And because people would, oh yeah, in April, or pardon me, in May, or pardon me, March 8th, there was a key reversal in the semis and Nvidia. And so there was a shift for a couple of weeks. Oh, rotation into the broad market. In part, that's why those averages held up better. I thought there would be something similar. We'd get a rebound in technology this week, and the net result, it would enable the S&P to get above 5505, make a new all-time high. But the underlying weakness is so significant that a little bounce, in my view, does not change the overall reality of what's going on under the surface. And can this continue for? Of course it can. But this is not a healthy situation. And the point being is if there's any increase in selling pressure, the market's internal strength is so almost non-existent, it's not going to be able to. That's how you get 5 to 7% pullbacks, even in a bull market. And if a better reason to sell shows up than just, hey, okay, we're just backing off, that's how you get 20% plus correction. I'm not sure we're quite there yet. But this just showing that underneath the surface, there's a lot more weakness than people realize. And the other thing is, if you look at the economic surprise index from Citicorp, it weakened a lot in April, in May, going into June, and all of a sudden, from mid-May, you see this kind of weakness in the broad market. It's kind of like everybody may be saying, well, we don't have to worry about a recession, but why then aren't they buying more cyclical stocks? Why isn't the market rallying or broadening out? So to me, this is a big warning sign. And a lot of people, I think, are so enamored with, semis and so forth. And I get it, artificial intelligence. But technically, this is not good stuff.
Yeah, it's not. Okay. And before we get into your actual technical charts, you had one more that you brought here, and that is oh no. Oh yeah, it is. It's right here. It's a momentum.
Oh yeah. So this is kind of what's been going on. Well,
I'm sorry, and by the way, this is out of order. My fault.
That's all right. One or the other same. The point is what we saw in those numbers in the table. This is kind of graphing like FOMO, fear of missing out. What am I afraid of missing? I'm afraid of missing semiconductors and artificial intelligence, and I got to own those things to the detriment of anything else. I don't want anything else. So this shows momentum stocks or index relative to the S&P. I mean, that's extraordinary to see a 25% shift, and especially, since early this year as the artificial intelligence story really took hold and people ran nuts with it. So again, is this, if you're thinking about the stock market, is momentum the thing you really want to rely on in terms of, a sustainable uptrend? No. This is more of a reflection of speculation. And that's, speculation gets kind of crazy near tops.
Well,
not midpoints, not bottoms.
And you're giving us this warning right ahead of the S&P chart that you brought. This is that marginal new high you were talking about, right?
Yep. So, just looking at the price pattern, as we talked last week, to me, it was like, okay, I can see 7 waves up. Advances are more often than not 5 waves. Occasionally you get 9 waves, which is an extension. And then on a rare occasion, you'll get 13. All right. So
wait,
to
that's
me,
over here.
That's way over there.
Okay.
So I guess it's possible, Blake. No, so the idea was, it looks like we'll have this pullback, which we were having for wave 8. And that if I was right about techs getting a rebound, a retracement rally in the cyclical stuff, which had been so out of favor, got a bid a little bit, we'd see the S&P go above 55.05. What I told my subscribers on Monday was to take a 25% short position if the S&P got above 55.05. So I think we're on the cusp of a pullback, um, 5 to 7%, potentially down towards that 5,200 mark. That's wave 4 of lesser degree. That would be one of the targets. Anyway, that's my
That's
take.
pretty, it seems pretty far away, Jim.
Well, it does in a market that has barely ever corrected.
Right.
Now, early next week, you have positive seasonality. The first 2 days of a month, you get some inflows. We've got the 4th of July holiday next week, which is also historically seasonally positive. So to me, can the market hang up through next week? Yes. The first 2 weeks of July historically have been the best 2 weeks in the stock market, going back, I don't know if it's 40 years. I don't know. I got to look at that chart again.
Huh.
The second two best 2 weeks were the last 2 weeks of December. So you got a lot of things that suggest that the market can hold up for a little bit here. But again, I think the overwhelming evidence is that there's more downside risk than upside potential.
So Jim, I know you didn't prepare your work for this, but I'm not sure if you've even done any of your work ahead of schedule. But next week is the jobs report, and it's going to be. I'm assuming we have a half day of trade between
Mhm.
4th and 4th of July, or 4th of July to, which will be the 5th of July.
Yeah.
But the market's looking for 188,000 jobs. Do you think this is going to be the month that we start to see some signs of weakness?
Tough. Again, there's been some issues with the establishment survey. You and I touched on them from time to time.
We've, yeah, been talking about it quite a bit, actually.
Yeah, yeah. And so to me, it's like, I don't know if this month, I mean, you got 155 million people working. So 1/10 of 1% variance is 155,000 jobs. But are we going between now and year end going to see a month that comes in, I think, under 100,000? I think that the odds of that are really high. Is it going to be for the month of June? I doubt it.
Okay. All right.
I think we're going to see more of the same, where the establishment survey is okay, and the household survey probably will have a rebound. It was a negative 408,000 in May.
Yeah.
So I would be shocked if there isn't a rebound in that survey. It is pretty volatile. But the bigger picture, the bigger trends in the labor market suggests we're going to see the unemployment rate tick higher between now and year end.
Well, that might mean that the dollar will stop here at resistance. It's a tricky one, right? Because you have this
It is.
French election over the weekend, which could put the euro on its back, or maybe we could see a turn and then the dollar actually comes under pressure into a weak jobs report. So what do you think here technically?
To me, I think this is a coin toss a little bit, in the sense that the polls have been showing that Macron is not doing well. So I don't think anyone's expecting that Macron is suddenly going to do really well this Sunday in the first phase of their election. So to me, this is where technical. You get above 106.25. It got a little bit above 106 yesterday. To me, it looks like it could pop. Just that simple, but I just think it's like, okay, would I have a position in this market? I was looking for being higher last week, but I'd have a pretty tight stop and not a very large position in the dollar, because Monday morning, if for whatever reason, it wasn't as bad as expected. Macron didn't do, you know what I mean?
Yeah,
And that's how markets have a
throwing in the
tendency
towel,
of
whatever.
working, there's anyway. So
Okay.
that's my take. But I think one has to respect the potential based on the pattern of a move above 109.
Okay. All right. Well, then, what's that mean for gold? Because gold has been holding the 2,300 level pretty damn well.
Yeah, it has. At the same time, I look at this and I'd say the probabilities are gold is going to decline, get below 2288. Yeah, it's in a downward channel, so hasn't, it needs to break out of that channel, obviously. The lower line is, below 2250. The 382 retracement is 2206. So my take has been, I think there's a decline below 2288 coming. And if it shows up that you want to be a buyer, if we get another plunge or drop, I mean, there's got to be stops under 2281,
Right.
2288. So you would think there's another 20 to 30 bucks if it takes out those levels. Does it go all the way down to 2206? Honestly, I'd be surprised if it did. But again, my point is, I think from the low of last September at 1812, you got three waves up. The correction has been very choppy. I think that implies that it's wave four. And after this correction is over, I think gold is going to rally above 2449.
All right. Well, the last chart you brought up is your favorite here is TLT. What are your thoughts? Because you've been expecting a rally this week. It's rolled over
Yeah.
a little bit more aggressive than you thought, right?
Yeah. I mean, I think what's happening, Blake, is okay, you got the good PCE number, but the results of that debate last night, I think people are like, Trump will be better for the economy. Whether that's correct or not is secondary to that seems to be the knee-jerk reaction
Yeah,
that
right. That's the instant reaction, whether it
yes,
comes true or not.
and again, the PCE was a decent number. I mean, it should have been supportive. So to me, well, what's causing him to go down? It's got to be the debate last night. If you look in my letter, I thought that we could see a pullback in TLT on Monday. And here's some levels. The initial decline from 94.84 to 92.48. It's an A, B, C, and C is equal to A. You get 92.24. There's a gap at 91.87. I believe this is like gold on a pullback. I think it's a buy. Ultimately, I think TLT has the potential to rally above the high we saw in December at 100.57, maybe 105, 109. The stop, I think 90.65. I would not like to see, I think it would be, I don't want to say negative, but it takes away the bullishness if TLT drops below 90.65. My, again, take is we're going to see the economy slow more than expected. I don't think Trump is going to be able to do anything to really change that equation. And even if he did win the election, he doesn't show up until January of next year. So this is, I think, again, sentiment like, oh my goodness, So I think this is a buying opportunity.
Okay. All right. Well, point taken, and we'll see if that transpires next week. Jim, next week, since it is the 4th of July weekend, we won't be doing our show or a 4th of July. It'll be the day
Yeah.
in between the holidays. So guys and gals, you're going to be without Jim and myself for the next 2 weeks. So make sure you comment down below and tell Jim how much you're going to miss him. And if you do and have enjoyed Jim's guidance, make sure you subscribe to this channel so you don't miss these videos. Make sure you email Jim at jimwelshmacro@gmail.com, right?
Yep.
Yeah.
And
Or you can go to Twitter.
Or you can go to Twitter
Yeah.
and take advantage of the opportunity to at least read the most recent issue in its entirety. And I want to wish you, Blake, and all of our listeners in the United States, happy 4th of July. Have a safe one, and hopefully it's spent with family and friends.
Right back at you, Jim, and to all our viewers. So thank you for all listening in. Have a wonderful holiday. For those of you not in the US, just have a wonderful week next week, and good luck. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.